Business Spotlight, brought to you by Cross Rhythms and Baba Baboon.
I'm Sonya and this is Business Spotlight in partnership with Cross Rhythm City Radio and Baba Baboon. Joining me in the studio this week, we've got the team from Minerva Financial Solutions who are based in Newcastle-under-Lyme. We've got the founder and the business owner, Nicola Conway, and we've also got practice manager Jane Johnson. Nicola, Jane, hello.
Hello.
Hi, Sonya. Good morning.
How are you?
We're good, thank you.
Good. Well, thank you so much for coming in here on Business Spotlight. Now, Nicola, I'm going to turn my attentions to you first of all, because you've got, I can't even think now, decades of experience within the finance industry, probably 30 plus years in the industry, and you started your business as well. You went off, you took the leap, and you didn't start it at a perfect time. I mean, when is there a perfect time though? But you started it literally within a month or so before we went into the first lockdown during COVID. How was that?
That was really scary. It's typical me, if I'm honest, Sonya. But, we've survived. We're still here. So I set up on my own in February 2020. Mm-hmm. It was really difficult. For the advice, I go right across the spectrum from mortgages, investments, pensions. And because it was such a difficult time, I really built the business on mortgages first of all, because pensions and investments can be really complicated, and it was more a face-to-face environment that was needed for that. Whereas to start off with mortgages first of all, it was much easier. We were doing remortgages where people have got experience of these things. Mm-hmm. Obviously, Zoom.
The power of Zoom.
Zoom started up in lockdown, so that was really helpful. It took a bit of getting used to. I think everybody found that really, but it's still here today. We still use it quite a lot, but it was a really challenging, scary time. And I did actually take on another job in lockdown as well, just to support my business while I was growing, just to go out and do my thing for the community really as well. So yeah, but I'm really pleased and thrilled that I'm still here and we're still growing, so it's great.
Exactly, and you have expanded. You've got Jane here with you now, who's practice manager with Minerva Financial Solutions. It's now 2024. As a woman in business, Nicola, I do ask a few women who come in who've got their own business what this is actually like. How have you find that, but working in the finance industry?
It is quite challenging. We did have a look at some statistics this week actually, and globally 28% of financial advisors are female, but in the UK there's only 17% of us. And there's quite a lot of advisors within the Newcastle area that I operate in, but I think there's only myself that I'm aware of that is female. So it is quite challenging, but I think again with Zoom and different things, it's made things more flexible. We had to adapt in lockdown. We had to make things slightly easier to do. So it's the sort of job, especially when you are in business, where you can sort of make the hours to suit. So I might take time out in an afternoon to go and have my hair done or to take my parents out, but I'll work in an evening or I'll work on a weekend. So it is quite flexible in that way, whereas before I think it was really very rigid between the working hours. So if you have got a family, I think you can make the job now work more for you.
And Jane, just coming to you on that as well, there could perhaps be still a stigma that a lot of financial advisors are male.
Yeah.
I mean, how have you found, yourself, and how do you, when you're speaking to customers now, is it a completely different game now?
It's changing, definitely, yeah, because it is, historically it is a very male-dominated industry, but we are finding now that more females are, interested in moving into financial services. And what a lot of people don't understand is that you don't have to have trained, from school and gone to college to do certificates for financial planning. It is something that you can come to later in life, which is, fantastic if you can, work around your family, you can sort of adapt, like Nicola says. Your working hours can be quite flexible, which is great.
And I mean, how long would it take then for somebody, to qualify as a financial advisor?
There's quite a lot of exams to go through, but certainly at St James's Place where we represent, they have an academy, and it takes 18 months to fully qualify. They hold your hand right through the whole process. They help you get the qualifications. I think they've got a 75% first-time pass rate. And then they can help set you up in business if that's what you wanted, or find you a practice like our own where you can go and work. So it is really good. And we're always identifying some of our clients when they come in. We'll approach them and say, have you thought about a career in financial services? I think you'd actually be really, really good. And these ladies can be typically in the 40s or 50s. It doesn't have to be somebody, as Jane says, fresh from university. They might not have been able to focus on their own career for family reasons or different things, whereas a little bit later in life, they've got more time, they've got more confidence, they've got more life experience. And, people are working until age 70 now, so somebody in the 40s could still have a really long and rewarding career in financial services.
I mean, something that's been sticking in my head for quite a while, I heard something on the news not so long back, and it's just stuck in my head, and it was on about that women, and correct me if I'm wrong, but could first open a bank account, but it was like the mid-1970s. And I remember I was in the car with the husband, and I was like, hey? I was like, hold on a minute. I was born in I'm not going to give my age away, but late 1970s. And I was like, blimey, because I could just not imagine what that would have been like now. I mean, obviously, in the work that you're in then, and even people who are going for mortgages now, how much has that changed? What's your experience from that, and how is it changing with those sort of products, should I say?
Well, that's right. I mean, I vaguely remember those times myself. Women couldn't have mortgages, certainly on their own, and they couldn't even get, sometimes in banks and building societies, you get a staff discount. It only applied to the males. So it isn't that long ago, like you say. But for us, first-time buyers generally can be a couple or somebody buying on their own. And 9 times out of 10, the person buying on their own is female. I can't actually think of the last time I did a first-time buyer mortgage for a male, because I think ladies are possibly more confident now. They maybe have better jobs than they certainly did back in the 70s or even the 80s. I know when I started to work in the 1980s, it was still very, it was better if you were a male, let's say. And I know these are changing now, but I think certainly females have definitely found their feet in the last decade, and it's still growing. And they're really quite confident, and doing better things for themselves.
So it's really then like a multitude of different factors where, things have evolved in many different respects, whether it's in careers or finance and different things where women are more coming through. Maybe, I don't know the stats, and I'm not going to lie, I don't know the stats of how many female business owners there are in the UK, which is probably something, we could delve into as well at some point. Yeah. But all them changes as well. I mean, even pensions, when you talked about how long now, women they might even be starting a career after a family in the 40s. Yeah. Having a pension and looking at that longevity, is there any differences with pensions as well?
Yeah, it's interesting you should say that, actually, because typically women are living longer. They live longer than males, but their pension pot when they come to retire is generally quite a lot smaller. So that can be for a number of reasons. Again, it could be because they've taken out time from the career to look after family, or they've maybe not had such a good job because they've worked part-time hours while they've had a family. They may take time out later in life to look after the parents, because obviously, again, people are living longer. And because the incomes have, again, this is all very general, but because they haven't tended to earn the same, and a percentage of your income is paid into your pension by your employer, when they come to retire, the pot is much smaller, which is difficult because they've got a smaller pot than a male, and they are living longer. So they've got to stretch it even further, to give them a good retirement. I think even in the news today, Next is challenging reports where females have been paid less than males for a similar sort of role. So I think it is getting better, but there's still a lot of work to be done. And when you think, I started paying into my pension at 18, I'm now 54. I've gone through all those years where females were paid less. it's going to take a long time for that to be rectified, because your pension is generally something you pay into for 40 years or more.
And is this, sorry, Nicola, is this where education as well comes into play, and education in finance?
Yeah, I think particularly in pensions, it is really important, because I think a lot of people hope that what they're paying into a pension is going to be enough for them in retirement, and there isn't anybody there to sort of ask them or show them the way. So their employer pays in, or they pay in if they've got their own business, and they hope it's going to grow enough to give them an income in retirement. They don't really understand pensions, so a lot of people get an annual statement, they have a look at it, they say, yeah, great, that looks all right, put it into a drawer, forget about it till next year, the same statement comes through. So we have been doing quite a lot of work locally, going into businesses and educating the staff on just generally on pensions, on their own pension scheme that their company provides, encouraging people to pay more into the pension, because generally there's a minimum you can pay in, but there's also a maximum, and people don't really tend to do that. But there's a lot of tax savings that can be made by paying into your pension. It doesn't cost as much as you would think. And sometimes your employer will also contribute a little bit more for you as well. So it's certainly worth investigating. But yeah, it's difficult because there's no financial education at school, and there's no financial education really in the workplace. So we've had some really good feedback from companies that we've been into, where it's the staff really understand more about the scheme and the importance of paying into a pension. A lot of pensions these days, if you were to pass away, there's still money left in the pension pot that will pass to your family. So a lot of people think, if they don't access the pension, the money will just disappear or go to the government, and that's not the case. Obviously there's lots of different types of pensions, and I am generalising there, but there would generally be money left in a lot of pension pots to pass on in the event of your death.
And, as well as pensions, and we've talked about first-time buyers, we've talked about people buying a house, but what other options are there out there where people could perhaps even look into the finances? As a thing, I've heard of equity release, I don't know a great deal about it, but is there other sort of, again, options which can be explored, and again, which perhaps people may need more educating on?
Yeah, so later life lending, or of which equity release is one of the products, has really become super popular this year. Okay. So I think we've all noticed the cost of living. We've all been impacted by how much things have gone up over the last 12, 18 months or so. When you're working, it's not so bad, because you can look for a promotion if you need to increase your income, or you could maybe get a part-time job, or people are doing things like selling things on Vinted, and there's all different ways you can increase your income. But when you're retired, you're a little bit stuck really, and the cost of living is going up, but your income isn't really moving with it. So people have been exploring equity release, and that's a type of mortgage for somebody that is a homeowner and that is over the age of 55, and it works in two different ways really. You can release equity from your property as a lump sum, or you could release equity as a monthly income, so to increase your income if you feel that you haven't got enough to live on really. And it's really beneficial, because some people are finding that they've still got a mortgage in retirement and they're struggling to make the repayments, so they could use equity in the property to pay the mortgage off. They might want to help family members out. They might need care but not want to go into a care home, so they can release equity maybe to pay somebody or carers around the clock to come and look after them in their own home. It might be for home improvements, if they need a new roof or new windows, new door, make the property more secure, modernise the property. If they're a little bit infirm and struggling, then they can have, maybe have the downstairs of the property converted so they can just live downstairs, because, they might have lived in that home 40, 50 years or something, and to move somewhere else might not be something that they want to do, or, all the upheaval. So equity release has become really, really popular for quite a number of reasons.
And how do you see that in going forward? You know, you've mentioned the last 12 months has been a lot of contributing factors for the popularity of equity release, but how do you see that now? Have you got any sort of suggestions or ideas on that in the next 12 months, how it's going to be?
I see it as a really growing market. I mean, we do mortgages now, and most people are taking the mortgage up to age 70. Even a few years ago, when interest rates were at the lowest they've ever been, people were still taking the mortgage over such a long term. So now people are coming to remortgage and finding their interest rates, because of the interest rates, their remortgage repayments are higher. So if you're taking a mortgage to age 70, you're banking on you being in really good health at that time to continue to go to work full time to pay the mortgage repayments. And for a number of people, that probably isn't going to be the case. I mean, we'll all know people that have had to retire early for one reason or another, because the health isn't great, or because of the job they do. If somebody is working in a highly manual role, the chances of them working to age 70 are quite slim. So whilst they hope that they can pay the mortgage off sooner than 70, we all know ourselves, we plan to do something, we plan to pay into our pension, but it doesn't actually happen. So it's just going to be a growing market, I think, because people are struggling financially. They're not going to be able to remain in employment whilst they still have a mortgage. People have had endowment policies in the past and cashed them in, but remained on an interest-only mortgage. They then need a lump sum to pay the mortgage off in the late 60s or 70. So there's all manner of reasons really why it is going to be more popular. And I think there's not as many couples or single people having children today. So also, I mean, I'm one of them. I don't have any children. So when I come to retire, equity release will form part of my own pension pot, really, because I'll have an asset in my property that I would like to leave to some family members, but I'm not too bothered about leaving all of the value of my property to family. So I'll be taking some of it out to enjoy myself. So there's all sorts of reasons. It doesn't just have to be through being stretched financially. It could be that, well, why would you not if you don't if you don't want or don't need to leave an inheritance? So there's positives with it as well.
Brilliant. Nicola and Jane, thank you. Nicola, just before we go, one last thing. I'm just going to congratulate you, because in the first 4 years of business, going through COVID and everything, it's been absolutely amazing. And I know you've expanded the team. You've got the lovely Jane here as well. And you've also got Sharon Parkinson, who's a paraplanner. Now, just before you go, just let the listeners know where you are actually based right now in your brand spanking new building,
which is beautiful.
It is beautiful. We love working there. So we have just moved into a recently renovated commercial property in Albert Street in Newcastle. We're there with the team from Albion Communications. It's their building, so we've got our own little floor, and we're absolutely loving it. It's beautiful. We've got clients that just pop in for a coffee sometimes. It's
stunning.
It's
really
stunning.
is.
It's been done to such. Well, the owner promised us it would be like a 6-star boutique hotel, and it actually is. It's lovely.
Sounds amazing. I think we might take the studio down there. Nicola, Jane, thank you so much for coming in here on Business Spotlight. That's Nicola Conway and Jane Johnson from Minerva Financial Solutions here on Business Spotlight with me, Sonya Farrell.
Business Spotlight, shining a light on our local business community. Brought to you by Cross Rhythms and Baba Baboon.